It's Thursday, the 11th of February 2021. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. Today's headlines: Australia's largest company, the Commonwealth Bank, will pay a bigger than expected dividend to shareholders and is upbeat about the future. Plus, IAG says higher premiums are underpinning strong growth in the insurance sector. The fallout for Crown Casino from a damning report gathers pace, and consumer sentiment rises, and that's good for the economy. Nothing retail investors like more than dividends, and Commonwealth Bank has delivered for its mums and dads shareholders, announcing a higher than expected payout. The bank will pay a $1.50 a share fully franked dividend after announcing a $3.9 billion cash net profit for the 6 months to the end of December. While the dividend was higher than expected, the bottom line was a touch lower. Commonwealth Bank Chief Executive Matt Comyn said the Australian economy was looking healthy. There's been strong growth in residential housing and business lending, and deposits are on the rise. The number of frozen home loans peaked at 145,000 last year, but is now down to 25,000. The drop in frozen small to medium-sized business loans was even greater. One negative was that the bank felt it prudent to increase the amount of money it put aside for bad loans. It now has $6.8 billion set aside for potential impairments, and the lender said it reflected economic uncertainty, particularly in the aviation, entertainment, leisure and tourism sectors. Commonwealth Bank is the country's largest company by market capitalisation. It's recovered from turmoil in financial services, including the Hayne Royal Commission, and the coronavirus pandemic remarkably well. The majority of its shareholders are retail, and they'll welcome the higher dividend. It's not back to its peak share price of 2015, but it isn't far off it, and the bank's done very well since October last year. The market bellwether is leading the way, and that's good for the ASX. In overseas news, the US Senate voted to impeach former President Donald Trump, rejecting arguments it was unconstitutional. I'm not going to give it too much airplay. I think most of us have heard the record before. But according to media reports, President Trump wasn't happy with his lawyer's early performances in the trial, though he himself was nowhere to be seen. And the World Health Organization has recommended the Oxford AstraZeneca coronavirus vaccine for use by all adults, including the elderly. South Africa had suspended its use after concerns over its effectiveness, while other countries, including France and Sweden, had restricted its use to younger adults. Locally, the country's biggest general insurer, IAG, will start paying dividends again, even though it made a $460 million loss for the last half year. The underlying results, which strips out lumpy items, rose to a profit of $462 million, up more than 20%. The insurer, which owns NRMA and CGU, said the number of customers it has and the prices they pay, aka premiums, were both on the rise. The National Broadband Network said its total revenue last half was up 25% on a year earlier, as 660,000 new customers joined the network. The NBN is now connected to more than 7.9 million premises across Australia and should hit its target of 8.2 million by the middle of the year. It made a pre-tax profit, including subscriber costs, of $424 million, compared to a loss the previous year. The fallout from the New South Wales inquiry into Crown Resorts, which found it was unfit to be a casino licensee in the state, has been quick and brutal. The report from Commissioner Patricia Bergen was highly critical of the company and some of its directors. Two of them, Guy Jalland and Michael Johnston, resigned yesterday. Both are part of James Packer's private company Consolidated Press Holdings. The group's shares recommenced trading yesterday and were down just a little over 3%. That's surprisingly small given the findings in the report. There were 2 new cases of community-transmitted COVID-19 in Victoria yesterday, taking the cluster from the Holiday Inn to 8. South Australia has closed its border to its neighbour. The Westpac Consumer Sentiment Index rose by 1.9% this month and is not far below the 10-year high recorded in December last year. Happy consumers, happy economy. Westpac said the management of the pandemic in Australia has had a constructive effect on confidence. There's a new food delivery platform coming. British-based Food Hub will take on Uber Eats, Menulog, Deliveroo and DoorDash. It claims its fee structure, a flat weekly rate rather than a commission based on the size of the food order, was more profitable for cafes and restaurants. Not sure about that, but more competition in the market means lower prices for customers. And 9 is hosting the tennis coverage 2 weeks later than normal this year thanks to COVID-19. When the tournament is held in January, it gives the broadcaster time to promote their shows. So far, in its early days, audience numbers are down around 30%. That's the Fear and Greed business headlines for today. Make sure you've hit subscribe so you don't miss out. There's also more in today's full Fear and Greed podcast, including an interview with Ben Willey about the state of the advertising industry. I'm Sean Aylmer. Enjoy your day.